All right, we are live for another Thursday's Top Tips in Real Estate here on the Arrow Title Services page. And every week we come at you with a new topic in real estate that is relevant to our market right now. Now, this week's topic is going to be very interesting. We are talking about the effects of appraisals in our market right now here along the Treasure Coast. And this is going to be a really good topic to pay attention to. Every week we have local realtors and lenders who have a wealth of information on the topics that we're talking about. Describe to us what's going on, and we have a great discussion about just what these topics mean. And the appraisals is a really big thing, a part of our industry right now. So I'm excited to talk about this today. And for all of you guys who are watching, if you're watching here for the first time, we do run this in 3 parts. So the first portion, we talk about the subject of the week, which this week it is about appraisals and their effects. And then the second portion, we talk about our #1 top tip of the week, because it is Thursday's top tips in real estate. And then the third portion is any announcements that these local professionals have. They always have great things going on. You can always reach out to any of the local professionals on here through their Facebook pages, which are in the description of this video. So I'm excited to get started on this, as well as if you guys ever want to rewatch these videos, they're available on our YouTube channel, Arrow Title Services, as well as all of our past week episodes with different topics. So let's get right into it. I'm excited to get this conversation started because this is so important with our market right now and how hot it is. So Alannah, why don't you start us off? And love in the background.
Thank you so much, Lucy, and thank you for this platform. This is going to be an awesome conversation. So I want to make sure first that our viewers actually know what an appraisal is. So I'm going to define it. The purpose of an appraisal is to determine the value of any real property. So it's an analysis that's conducted to benefit and protect both the lender and the buyer, ensuring that they don't overpay for a property or lend more than the value of that property. So here comes the subject. The effects of the appraisal are numerous, right? It affects the buyer's experience. It affects the possibility of being able to close that deal and secure that loan for that property for the amount that the buyer needs. It also has an impact on the seller. You know, the price of that property that's listed and the expectations set are very important to make sure that this is not a hurdle that takes anyone by surprise. I would love to hear what everybody has to say about it and then, discuss it.
Awesome. Thank you for starting that off with a good definition of what it is so that people out there who have never even heard about what an appraisal is know exactly what we're talking about. So thanks for starting us off that way. Eric with the Dean's Group, why don't you continue us on here?
Yeah, so my take on the subject is, first of all, thank you for the platform to come on here and speak about the topics that we do talk about. It definitely affects both sides of the transaction in the real estate world because obviously we don't, as a buyer's agent, we don't want our client to pay more than what legally they can't pay more than what the house is worth. So just some effects that I've encountered in the industry is just, if the house appraises for what you have it under contract for, awesome, means you didn't overpay for the home. If you have, if it appraises over, obviously you have equity in the home. And then obviously if it appraises under, now you have to renegotiate with the other agent to come to some type of agreement that they can agree on. So that's just my take on the effects of the appraisal.
Awesome. Thank you, Eric. And you brought up some points in there that I'm sure some others will elaborate a little bit on, but definitely another good addition to the conversation. Dimitri, what do you think about the effects of appraisals in our industry here?
Well, I would tell you the appraisal, which I love having that definition because it is, it's both sides. It's protecting the buyer that they don't overpay, and it's protecting the lender that they don't overlend. Of course, we think all the way back to 2008 when our industry had such a collapse and had so many problems. Appraisals were actually one of the things that were at the root of it. Prices kept going up, appraisals kept increasing because they were trying to keep track or keep pace with what the increased sale price of the house. And we're kind of in that realm right now where it's a hot market. Buyers are facing a limited inventory. Sellers are taking advantage of that and saying, well, my house is worth more money because there's not that many and it's just worth more money. And my neighbor down the street, they got more money, so I want more. And what I'm seeing, both as being a listing agent as well as a buyer's agent on listings that I've had, I've sold them for what I thought was a fair price. I've listed them at a high price because that's what my seller wanted to do. We've ultimately came down to what I thought was a fair price. And then when it gets appraised, it's actually come in thousands below that as well. And multiple times we have actually taken the purchase contract price and reduced it down to the equivalent of the appraisal. So it is definitely, I guess in our market, we're definitely seeing that the appraisal is having a huge effect on both sides. I'm also seeing that sometimes the same house, different appraisers appraise it differently. I recently had a house, was originally listed for $399, sold it for $370. Thought that was very fair, especially since the house directly across the street, which is almost identical, I had sold a month earlier for $375, and the appraisal came in at $368. So I was reasonably certain this house at $370 was a fair price. The first appraisal actually came in at $330. Got it reappraised, and it came in at $370 with the price. So, I think what you're going to find out with an appraisal is that each appraiser is going to come up with their own method, and obviously we have methods we've got to follow for that. But when I say their own method, the comps that they use could be different. The houses that they're choosing to use that value, how they're determining the differences in upgrades, whether the kitchen was new, whether it had, the one pool was better than another. Was this one saltwater versus chlorine? Does that value something different? So there's a lot of factors in the appraisal, and no two houses are actually identical. So it does make it tough, and it's the appraisal is that, that checkpoint to make sure all parties are on the same plan, and from a financial standpoint, not just the individual, but our economy as a whole is kept safe.
Love that. Great addition, and very valuable to have those examples put in there. And I think it's going to be really interesting now because we're going to the lending side of things with the two lenders that we have on board here. Because for those of you guys who don't know, and you guys might be watching and you're not familiar with the process on the back end of things, it's actually the lender who orders the appraisal, and there's a regulation with that as well. So it is a third party that's supposed to be helping keep the industry to not go past what these houses are actually worth out there. So there's a checks and balances, you could kind of call it. So let's go ahead and go to Eric Rosberg and hear from him on the lending side of things, what they're seeing with appraisals.
Awesome. Thank you, Lucy. Hi, everybody. Eric Rosberg, Cross Country Mortgage. Such a great and important topic. First off, I want to give a shout out to any appraiser who is watching this right now. A lot of people don't know appraisers go through a 2-year apprenticeship program. It is not an easy job. It's something I would never want to do personally. So I give every appraiser all the gratitude. So what is an appraisal? An appraisal, we kind of talked about what somebody is willing to pay and what the house appraises for is two different things. What the appraisal does is it tells lenders, essentially that is what you can borrow money off from. That is the important number on the appraisal. Lucy touched upon a great point, and so did John. The appraisal is ordered from the lender through an AMC, an appraisal management company. Back in the early 2000s, it was a little bit different. So the lender, Tony and myself, we have no direct interaction with the person who is actually appraising the property. It all goes through a third party. When they appraise a property, there's 3 different methods that they look at when you look at an appraisal. They have a sales approach where they're looking at comparables, comparable sales within a certain time period. Cost approach, different things that have been added on, and an income approach, investment property type things. So I guess the biggest takeaway from lending, because there's some other stuff I'll let Tony talk about, is that appraised value is what you can borrow off from. Just because people can pay more, but that doesn't affect what the bank will look at for a value on that property.
Absolutely.
Tony, take it away.
Awesome. Thanks, Eric. And really quick before we move on, I just want that to be a little bit clearer, because you said that they can pay more, but all you can get a loan on is for as high of the value that it's appraised for.
Correct.
So I just wanted to make that clear for those who are listening, if they didn't catch that it is that the whatever it appraises for, that's the absolute max you can get a mortgage on. You can always pay more, but that's going to come out of your pocket. So thank you, Eric. That was great. Great addition to the conversation from the lending perspective. And I know that Tony will delve it even deeper. So Tony, what do you got for us? Yep, you're muted still. Tony. Here.
How about now?
There you go.
All right, perfect. So, hey everyone, Tony Garcia here with Cross Country Mortgage. Just to follow up on everybody and Eric as well. So, everything is correct. To make it simple for somebody watching, because I know things can get complex. We're like, oh, the loan amount, everything else. Basically, if you're purchasing the home, for a certain price, you're putting, let's say, just 3.5% down. Your loan amount actually off what you're borrowing is $300K. If that appraisal comes back at $275,000, you either have to come out of pocket that $25K, work with the sellers and the listing agent and your agent to see if they're willing to negotiate. John spoke on that a little earlier, that he's had some that they brought down. This market, not gonna lie, there's a lot of people that are paying that difference and paying over. Is it necessarily the best thing? We're soon to find out, and we'll see. But outside of that, some of the other big things to look for with appraisals. So we do order, as we discussed, through an appraisal management company. So don't blame us. I know not a single realtor on this call is one to do so, but a lot of times it comes back on the lender. Tony, what the heck do you mean it didn't appraise? Hey, did we got some comps? Let's get some comps. Let's go back and we can do a dispute and see what we can give, to show the value of the home. They are going to be looking at recently sold properties. Oftentimes I have, work listing agents coming back saying, hey, Tony, what did they use? No issues. Eric, myself, we are definitely here to say, hey, we wanted to appraise as well. We're not trying to lose a deal in the end ourselves, but you also don't want a client overpaying for a house just to push a value to get them in the home. So you got to look out for their best interest as well. And that's why those appraisal management companies are in place. The best interest of basically all parties moving forward. With that said, appraisers are human. They make mistakes. They may overlook a comp. They may be looking at just recently sold properties that are just in the MLS. And I know this word we don't like to hear too often, any of us, but a FSBO, or for sale by owner. They may not see some of those that you can access and look and show, hey, well, this one sold as well. Why didn't you use this? There are times that you can get it corrected and get a different amount. It's not the easiest thing in the world, but it's possible. It can happen as long as you have something to show why. You got to have something. You can't just say there's another 15 properties that are listed 25,000 over. I'll let the realtors on this kind of go into that one. Just because something's listed doesn't mean that's what it's worth or what it's going to sell for. So a lot of times it'll just get traction and get going from there. Another big thing that people look at when it comes to appraisals is a lot of people have this mindset when they see a conventional offer compared to an FHA or VA offer. Oh, we're not taking FHA, VA. No way. Those appraisals are the worst. Are they a little different than a conventional loan? 100%. There's no way around it. When it comes to FHA, it's a little more risky of a loan, so they want to make sure that they are also offsetting the risk on the house to make sure it's a better buy for the client. With that being said, it's not, the paint colors on the wall have a scratch in it, something like that. If you have lead-based paint, there's chipping paint, peeling paint, or parts of the outside peeling off. Those items will need fixed. But in the end, the biggest thing FHA, VA are looking for, it's more is it structurally sound? And after that is health and safety. If you see something that's going to be a health issue or a safety issue, it is the appraiser's discretion on what they consider that. But that's the biggest thing. You know, some of the minor wear and tear of a home is not going to cause these issues with FHA. Now, if you have loose wires hanging from an electrical box, yeah, that's going to be an issue. It's going to need to be fixed. But outside of that, you know, I know in this market, I've heard numerous times, hey, we're not accepting basically any FHA offers. And it's not due to the fact that the home won't pass. It's due to the fact that there's just kind of bad reputation out there with them. So, you know, if you get an FHA offer out there, just speaking to all other agents out there, call if you have any concerns about what may pop up, call your lender. Say, hey, do you think this will be an issue? Again, Eric, myself, we can't tell you 100% because it's up to the appraiser, but let's talk it through. It's a market where, again, I don't know how many times I can say this. We have to continue to work together because on all sides, there's so many moving parts. We got to be on top of it with together. If we're not working as a team, this market's going to beat us all up even more than it already has right now.
Great insight, Tony, as always. Thank you so much.
I love that you touched on that, Tony. The responsibility of all of the parties to take part in this, right? We have the agents who listing a property, we're responsible for setting the expectations with our sellers. If our sellers' goals are in a different way than those expectations, we've done our job setting them. Our next job is to do as they ask us to do, unless we're unwilling for whatever reason based on what that is. But it's also the buyer agent's responsibility to be doing comps before they end up suggesting a price or suggesting overpaying for something. They have a responsibility to protect their buyer and to set those expectations that, hey, we might be offering a little high, and in the event it does come in low, what's your cash flow? Where's the opportunity here? It's the responsibility of the listing agent to make those phone calls. To your point, Tony, hey, this is really close. I'd like to know a little bit more. Those are the conversations that make us the professionals, and us being objective makes us better prepared than anyone else to serve. So I'm so glad that those things got touched on by all the professionals here.
Absolutely. Go ahead, Eric.
I appreciate Tony putting in there the fact that, you know, appraisal, they are humans and they can make mistakes. One of the recent deals that I had is the appraiser noticed that the house was under the property appraiser for only 960 square feet, whereas the listing agent was marketing it for 1,300. So obviously you have a big spread of square footage, which would have affected the appraised value. In this situation, the back patio Florida room was enclosed in, so the permit that was pulled for the screened room was not filed correctly at the property appraiser, so therefore it did not show up on the property appraiser website. So this was a great catch from us to get it to where it would appraise.
Yeah, absolutely. Yeah, that's a great example. And I think that, you know, there's a lot of people out there that are worried about the rate in which our market is going, right? Because we are in a very popular area. We are growing a lot. We know Port St. Lucie is growing a lot. We know new construction is adding into that as well, which sometimes, you know, appraisers might not be considering new construction that's coming in these areas, or even when they're appraising new construction homes too. Like, that's a whole nother kit and caboodle type of thing. But I think people are worried about the fact that prices are going up in the area, and they're not quite fully aware that the appraisal is what's maintaining and trying to make sure our market isn't going past what it should at the end of the day. And it's protecting, you know, like Alannah mentioned in her example or her definition earlier, it protects the buyer and the lenders in the situation that you aren't overpaying for something, because at the end of the day, sellers always want more for their property and buyers always want properties for less. So, it's definitely a route of communication that has to happen between all parties, whether that's the lender and both sides of the realtors and even the title company, and just making sure that there's an open line of communication and understanding exactly what's going to happen moving forward, because there are points of negotiation throughout the process if something happens. If you get underappraised and you've put money down, it's not the end of the world. It's not like it's just gonna end. It's like there's a conversation to be had. And if you're working with a good professionals and you have a good system of communication already set up, then it's not going to be the end of the world. You're going to come to a negotiation that's right for both sides. There's so many pieces in place to make sure that everybody is protected in the process. And I think that that's what's important for people to understand. Have a good team on your side and things will go way smoother for you along in the process.
May I add something else?
Of course.
Thing is, and I'm sure that Dimitri and Alannah can agree with this, is what we're seeing a lot in our market right now is now the appraisal contingencies being removed from contracts.
Yeah.
Now they're expecting, because only 6 months ago, appraisals were at, like, the houses were so much lower. Now they're so much higher. So now they're asking for appraisal contingencies to be taken out of contracts.
Yeah,
So,
that is an aspect there too. And I'm sure someone could explain exactly what that means.
I would like to kind of, now that he said that, so
Yeah.
for people that don't know what that means, it simply is, if you as a buyer are eliminating your contingency, you are basically stating that you are willing to lose your deposit that you have down if you're not able to pay the difference if that appraisal does happen to come in low and the purchase price is higher. So I do my best to explain to buyers. I have a few now that are going through that, wanting to waive it. I know it's the realtor's job as well, but I always like to, make sure my clients are aware of everything that can happen throughout the process. And I did want to touch base, not to get off subject before I forget, as far as Lucy, you make great points as well about why the appraiser's there, to kind of monitor the market and not let it inflate so fast. I can almost guarantee everybody on this call feels the same way. I know not everybody in our industry does. So this is kind of a thing to try to get at sellers. Yes, I know as listing agents, you obviously want to sell for the highest price, because there ain't nothing better than being able to post, hey, highest sale in this market, so on and so forth. Great marketing material. Just like me and Eric love to post 8-day closings. It's definitely great there. But as far as long-term, like, I don't think any of us are in this for the short term. Having things go way too high, everybody knows. If not, you're going to hear it in my later session. Rates, Eric's probably discussed this when he was on last week or time before. February's been tough when it comes to mortgage bonds and interest rates. They're rising. Also, you have prices continuing to rise. If they continue to rise, rates continue to rise, which we kind of do expect throughout the forecast, as well as, I'll touch on this later as well, homeowners insurance. Listen, our buyers in our area, no matter what area you're in, there's price points that they're going to qualify in. If we want to keep doing business and sustain a business model, we are going to need to have those checks and balances in place so we don't have the market get back to where it is. So it's more of a safety valve. And as industry professionals, we also need to realize, instead of pushing it, we need to think long-term as well and make certain that, hey, we're doing this to make our industry strong as a whole and not see what happened in 2008, 2009.
Absolutely. And that's why they put it in to begin with. They put that appraiser aspect in there to protect people. And people think of this market right now as the same as 2008. They think it's going to explode like that. And that's not true. There's a lot more in the background that's happening that is protecting buyers and sellers from this happening again. That was the whole, it's being proactive and learning from the past, right? And Alannah mentioned that earlier about speaking with your clients and making sure you're giving them the proper expectations. So sure, if you want to list your house for more and it's not really worth that, that's a conversation with your realtor and they can post it as that, just like Dimitri mentioned earlier. seller wanted it to post for more. He posted it for more. They realized they had to bring it down because it wasn't selling at that price.
Right.
It's a conversation. You're working with professionals that are in this every single day, and you do need to trust your professional at the end of the day. We're doing it every day and seeing what's going on. And it's really hard for someone who has never been in the industry and doesn't understand the ins and outs to come in and be like, well, this is what it is. And we're like, but that's not what we're seeing. And I know that Dimitri and Eric looked like they had something to add too. So go ahead.
I'll jump in there. So, so two things that I would like to say as as a buyer's agent, I have been routinely, especially if I think that the house is priced and is not going to appraise, in the contract, in the extra comments, I'll actually put seller agrees to lower purchase price to match appraised value if appraised value is below purchase price. Put that little statement in. That kind of gives the seller a little heads up. Hey, your house, if it doesn't appraise, we're going to come back to you and want less. And then the other piece about the appraisal contingency, as long as you filled out the percentage of loans, so you put in the very part of it that said, hey, I'm getting a loan. It's a 75 or a 95% loan. Say I'm doing FHA, doing a 95% loan, and you filled that out, and it doesn't appraise, you're not going to lose your deposit because you can't get a loan. If you can't get a loan, you automatically get your money back. So I don't always look that I have to use an appraisal contingency, because if I filled it out right about what I expected for the loan, which was the agreement upon which I purchased the house, if I can't get that loan, then I get my money back and I get to walk away.
Yeah,
so those 2 points I wanted to bring up.
Great point. Thanks, Dimitri. Eric, did you have something to add? I saw you unmute yourself earlier. Was it
Me? No, not this.
Oh, sorry. I forgot there's two Erics. Eric's
Which one?
Eric Rosberg.
yeah, I do. So Alannah hit the nail on the head with the communication. And I know Tony, because we work for the same company, does the same thing. When I get a contract, I'm having a conversation with the buyer, with the realtor, usually with the realtor first. All right, we have the contract. What have you seen? I know you've already comped this out. Do you think this property is going to appraise? What is the appraisal going to be at? I'll give you a perfect example, because Lucy, you know I love examples. Went under contract right from the beginning. The realtor was like, I don't think it's going to appraise. I had set it up FHA. And she was conventional loan. She was going to put 5% down, but I had a backup plan, and I'd already communicated that with the buyer, with the realtor. If it comes in where you think it's going to be, we can still do this loan, but it's going to be a 3% loan. So on the contract, it went in at 5%. Appraisal came in. We're doing it 3% down. So that ate up some of the difference. So the client came up with a little bit more money than originally anticipated. But the point is, Tony and we're having those conversations up front. So because our goal isn't to say, oh, the deal's dead, or we don't want to worry about getting escrow, getting the EMD back. And we want this to work. So when you're working, and we all like to say local professionals, when you're working with a true local professional, we're looking at problems before they're problems. So that's why, Alannah, you nailed it. The communication, we all need to be on the same page, and the buyer needs to be aware, hey, we have options if it does come in low.
Absolutely. No, and again, the communication's important in our industry with every facet. But, just understanding how the appraisal even affects this process is really important. And I think a lot of people don't know how important it is in the process. So I'm really glad we were able to have this conversation. And thank you guys for all of your input on this too. And if you guys are watching live right now, make sure you guys rewatch and listen to what conversation we just had, because it was really just an in-depth, great look at how appraisals are affecting our market right now, and how you can be proactive in understanding how that's going to affect the process if you're looking to buy or sell in this market right now. Again, if you have any questions for the local professionals who are on here, you can go ahead and reach out to them on their Facebook pages, which are linked in the description below, as well as if you want to watch this video, you can always do so on the Arrow Title Services YouTube channel. Now, I want us to go on to our next section of this video, which is the #1 top tip of the week. This is Thursday's top tips in real estate. So it's always great to hear each and every week what tips we have, because they do change sometimes depending on things and how they're going with the market, because things are changing all the time. It's like a daily basis. It's crazy. So we'll go ahead and start off with Alannah. What is your #1 top tip of the week?
Woo, Alannah Ghazal with EXP. My top tip for the week: expect that the only thing that ever stays the same is change. This market is constantly changing, which means you don't know as much as you think you know, unless you're looking at it every day. So back to my old fail-safe, trust your local professionals.
I love it. I love it. The one thing, I say it all the time, the one thing in life that is constant is change. And if you're uncomfortable with change, well, then I'm sorry. I'm sorry for your loss. Awesome, Alannah. Thank you so much for that tip. All right, we're going to go right on to Eric with the Dean's List Group.
So Eric Grimsman with the Dean's List Group. My tip is doesn't always have to be the buyer that does an appraisal. It might be in the seller's best interest to do an appraisal themselves so they know what to list their property at.
Ah, that's a good one. That's a good one. Along with inspections too, pre-listing inspections.
Yes.
So that you know what people are going to be getting results on as well. So that's a great tip. Thanks, Eric. All right, Dimitri, what do you have for us? What's your #1 top tip of the week?
All right. So my #1 top tip is more for other realtors. And that is, we're in such a hot market and it is so busy that when we put offers in, it's likely that the other realtor on the other side of that equation is swamped both with buyers and listers and how many offers that they've got. And so you better call them and verify they got your offer, and you better follow up with them every 3 hours or so to see what the answer is. Otherwise, you could go days and they're going to forget all about you because 20 other people got ahead of you in the line. So that's my top tip.
Woo! That is awesome. Follow up.
Yes, follow-up is key in our industry for sure. And if you're local or if you're professional, whoever they might be, isn't doing that, then that's why it's so important to use a local professional. And everyone on this call I know is doing just that, follow up. So make sure you guys reach out to them because they're great. And that's why they're on here every single week. They're taking time out of their day to share with you guys these nuggets of knowledge. Love it. Thanks so much, Dimitri. All right, we're going to go to the lending side of things. Eric Rosberg, what do you have to share with us with your top tip of the week?
All right, Eric Rosberg, Cross Country Mortgage. Top tip: if you are even considering buying a house this year, do it sooner than later. Tony said it. I'm going to say it. If I was a gambling man, which I might be sometimes, interest rates are going up, house prices are going up. The sooner you find a place, the better off you're going to be. Act fast, fast, fast.
Fast, fast, fast. Great tip, Eric. Thank you so much. And it's good to know that update on those interest rates as well, which I know Tony mentioned earlier as well. So Tony, go ahead. What's your #1 top tip of the week?
All right, Tony Garcia again with Cross Country Mortgage. So I'm going to go on my own, but I got to follow with Eric's because it's that important. If you're refinancing and been on the fence, you missed out, but don't miss out on what gains you can still have because rates are still very good, but they've risen. They're going to continue to rise. You need to be prepared. If you're buying, now's the time, because if prices keep going up and interest rates continue to go up, guess what? You're in a worse spot. But my top tip of the week, if you're a buyer looking to purchase any home. So I've started doing in every pre-approval I sent out, it's terrible. I don't even like doing it, but I have to because I like to have my buyers prepared. I discuss it as well. I'm putting a disclaimer in it when I send the pre-approval, depending on the age of the roof and getting a homeowner's insurance quote. Typically not the biggest thing in the world, depending on what state you're in. But Florida, we've taken a little bit of a bloodbath here when it comes to insurance, especially on roofs that are 15 years or older, some even 10 years or older. So getting that, people don't understand a lot of times, and it doesn't make sense too much, but your insurance is part of your mortgage payment if you're getting it escrowed. That has a lot to do with what you qualify for. Eric and myself are qualifying you off an estimated insurance. We are not insurance agents. We do not know if you're buying a newer home or an older home, the age of the roof. Your realtor doesn't know that as well. So you need to be prepared. If you see something, you're putting in an offer. I'll be honest, when I run numbers and tell my client, I'm like, hey, if you're looking at a home 15 years or older, let me know. We'll work on getting a quote up front. If you want to prepare an offer, let's get a quote back to see if it's going to make sense and you're still going to qualify. On that, I also have a question. Am I allowed to ask a question as well, Lucy?
Sure, go ahead.
I've kind of been thinking about a way to, it's not going to solve the problem, but a way to maybe mitigate the problem is agents, realtors, this one's for you. I'd like Eric to chime in on his thoughts, but I've been speaking with a couple of my realtor partners recently about this because I've ran into this issue a few times. I've almost been thinking, again, I know without a wind mitigation 4-point, we can't get an exact dollar amount on insurance. We know that. But almost thinking with these new rising rates or insurance premiums, with new homes being listed, if the roof's over 15 years old, maybe even get an insurance quote from a local provider and put it in the MLS listing to kind of have an idea of what we can look at. Because hate to say it, in the end, when we're sitting there putting in offers and running numbers and I'm using $1,800 for insurance or $2,000 a year, and it comes back because the roof's 18 years old and it's frame, and all of a sudden it's $3,500 a year, $4,000 a year. Now you don't qualify. Not let alone did the buyer waste their time, the listing agent wasted their time, the buyer's agent wasted their time, and the sellers wasted their time. So I'm just trying to figure out a way to get ahead of the curve so we actually can try to. We're not gonna solve the problem, but maybe mitigate it in some situations to, waiting until it's under contract and moving forward. Just a thought on my end.
Go ahead, Alannah.
It's so funny you say that, Tony, because I recently, working with a buyer, have experienced seeing that on the MLS searches for the first time in my time doing this. I noticed that several of them were starting to notate that because they knew that their properties had aging roofs and that would potentially become an issue for a buyer. So it actually was a huge benefit. And I myself am going to be implementing that regularly into my listings going forward. So I'm so glad to hear that it'll be a benefit to you as well.
Oh, 110%.
Awesome. Go ahead, Dimitri.
Yes, I like that as well. And I've had a couple times where the insurance, because like you said, it's an older frame roof, it may not have, in the 4-point, there's got to be at least 3 nail straps holding that roof down for insurance to give you the discount. And one of the solutions that I came up with is I recently found a company that for typically about $800 on most houses, they actually go for the roof and they add that 3rd nail and give you the certification. So I actually sold a condo down in Delray recently that her insurance was going to be $3,500. We paid $850 to get that 3rd nail put in, and it dropped her insurance almost $1,400. So by spending that $800, and we just built that right into the cost of selling the house, and she was happy, the seller was happy. Both agents, we were happy because we got our commissions from selling it, and the deal was saved.
Woo! That was good. That was a good scenario to bring up, in that it just paid for itself right there and then some. So right. That's definitely a good scenario, and important to know, like from the insurance side, like what they're even looking for, which is something that, having your local professional, whether that be on the mortgage side or the realtor side. Everybody who's on this call has their own connections. And if you don't know someone in the industry here locally that can help you, they can help guide you and get you connected with a person in insurance that can help you get there. So, you don't have to feel like you're going through the dark to get to the solution that Tony has brought up with, which thank you so much, Tony, for bringing that up. I think it's a great point. And I think that you shouldn't wait until you're under contract to get those quotes. You should be having a local insurance agent, giving them an address and saying, hey, can you do a quick quote on this? We're about to put an offer in on this, or this house I'm interested in, or whatever it might be. So that is a great conversation to have. Thank you so much, Tony.
No problem. And I'd say it also helps then, because like you said, when you're putting in an offer and doing a quote, hate to say it at that point, it becomes more of a rush tactic. Whereas if you're listing the home, it's just a way, in my opinion, that can kind of eliminate that rush and urgency. It's just something you're requesting once you're putting it on the market. So there's a little more time. Whereas we know, unfortunately, right now, and I'll be honest, I don't want to say I'm victim to it, but I've been in this situation. I've told the buyer, hey, obviously you don't have time to wait on a quote right now. If we don't get it back in the next hour or two, you have to put your offer in, but let's at least get a quote in the works. So we know that way, if they do accept your offer, you're not leaving the seller and listing agent on the hook for days as well. Let's do what we can up front to see if it works and go from there. So it's just something, like I said, to try to mitigate as much time and effort on not just the buyers and sellers, but all of our parts as well. And it's only going to make it better for all of us in the end.
Yeah, absolutely. And hey, you guys just heard real live examples of what these professionals have done here locally with their examples on how they've been proactive in these situations to make sure deals are getting done. So, you know, even with those appraisals or, you know, those insurance quotes and whatever it might be, each person throughout this call has shown you an example that they have done in their own business to be able to help their clients. So having someone who is proactive and going to help guide you in each and every way over those speed bumps is the way to go for sure. So thank you guys so much for all of the amazing tips this week, as well as the amazing conversation we had earlier. If you guys are just tuning in now, make sure that you guys rewatch this video, because there was a lot of great information that you're not going to want to miss on this topic of the effects of appraisals. And we'll go ahead and move right along to our last portion, which is the announcement section. Each of these local professionals have a lot going on here in the industry right now. We are all very busy, but they have taken time out of their days to be here. So if you guys, we're going to go through the announcement section, but if you want to hear more from these local professionals, whether you're buying, selling, or not this year, go ahead and reach out on their pages or just like their pages and get connected with them, because there's always information coming out on there and it might just be beneficial to you or someone you know. So we'll go ahead and get along with that. Alannah, what is, do you have something coming up, an announcement you want to make?
I'm unmuting myself. Announcements. Gosh, listen, just a shout out. It never hurts to have a conversation. If you don't think you can make moves right now and that concern is holding you back, but you haven't spoken with someone, you're guessing in the dark about your future. What are you doing? Call us. Call me. Call me.
Love it. Thanks, Alannah. Eric, what about you?
Nothing to announce, just that I am available if anybody needs any help with any real estate needs or wants, just here to help. So yeah.
Thanks, Eric. And Dimitri?
Okay, so I've got a listing that is going to come back, and I'm going to share that real quick with you. Can you see it?
Yeah.
You can see it. Perfect. Okay, so this is a 55 plus gated community. It is modular homes. This particular one, they own the land. It's the largest lot, almost half an acre, actually. It's on the water. And the cool thing about this is this whole end down here is actually a studio apartment that's rented at $700. So this is being offered at $274 with a $700 a month income on it. If you estimated all of your costs for your monthly payment, including taxes and insurance, is probably about $1,450 a month when you're all said and done. So that means you have about $750 out of pocket to live in this beautiful on the water, which is a 2-bed, 2-bath, very nice modular home. And that section, by the way, that was on the end is actually CBS as well, and it's available. Just reach out to me. I'll see if I can show you a picture. Here we go, of the water. So it's a great place to live. But you got to be 55 and older, just so you know.
Well, darn, I'm not not quite there yet.
Yeah.
But that is a beautiful property, Dimitri. So thank you so much. There's plenty of people that are 55 plus here in our community that I'm sure Love that. So thank you so much for that. And always great to hear what you have coming up. Eric Rosberg, what do you have coming up?
So my top tip, Tony just blew my mind, like blew up. So top thing, he gave me the tip. All my pre-approvals now are going to have the age of the roof and the home on it. Thank you so much. I don't know why I didn't think of that. Top tip, interest or announcements. I'm sorry.
No,
Announcements. A lot of you're gonna hear that the interest rates are high. There are still options to refinance, but it's something you want to do in the next week or two. So interest rates are going up. That's the announcement.
Absolutely. But hey, they're still not as bad as they were years ago, right? They're still in the mid threes right now, right, guys? Or something like that, around there, mid to low threes, somewhere in that range. I'm not a lender. That's them.
You're on point.
Yeah. So in that aspect, I mean, years ago, 7%. Someone who was telling me from the 90s or whatever, 17%, you know? So that
was 70s. She said 70s. I remember that from last week.
70s?
My mind.
17%.
My first house, the first house I ever bought was at 14% interest rate.
Heebie-jeebies. You guys are still getting the houses pretty much for free. So love that. Thank you guys for bringing that to light. And Tony, any announcements from your end?
So not necessarily an announcement, but the thing is, if no one's heard this, I guess there is an announcement. The market's hot. The market's likely to stay hot. So the announcement is it's hot. Work with and again, we always say local professional, but I've noticed one thing we've been leaving out. Work with a trusted local professional and make certain that you're using, because honestly, in the end, if you're not working with a trusted local professional, you're doing yourself a disservice. And it's gonna, in the end, it may, you may not see it now, but you're gonna find out why in the end. And it's just do yourself the best service to yourself by working with a trusted local professional.
Absolutely. Completely agree with that. The local professionals here, and I want to make a last point, I guess my announcement I can make, is that we all know it's very easy to go online and find rates or, information, and, the internet is a very useful tool, but it's not the end all be all answer always. And why we stress the local professionals here in the area is because these are people who want to help you. First of all, they've come on to here just to spread the word publicly about these important topics and give you guys a better understanding of how our market is. They've taken time out of their day and their busy schedules to be here with you guys, but they also they want to help people. The people who are here want to help you get into that house. And sometimes, when it comes, there's a more humane level to it. And everybody here has their professionalism and their reputation here in the community that they're not trying to, tarnish that in any way, shape, or form. And their ability to serve is all of the people who are on here are very heartfelt and want to help you. If you're talking with someone randomly online in another state, they don't have your best interests in mind. Sometimes they can, but they don't always, because they don't have any skin in the game. They're not here local. They also don't know what our industry is like here because they're not here physically present in it. So just be aware of that. Just be aware that's why we push on the local professionals so much, because they want to help you, and they're going to answer that call, and it's not going to be a robotized, that's not even a word, but robot call. And it's that humane interaction, and these professionals will really help you in any bump that comes along the road in the real estate. And it's so important to have a good team behind you. I can't stress that enough. So thank you guys so much for coming on here.
Thank you. All right.
Again, if you guys have any questions for any of the professionals on here, reach out to them on their Facebook pages. And we will see you guys again next week. We go live every Thursday at 2 p.m. Eastern Standard Time. And we will see you guys then. So thank you guys so much. Have an amazing week.
Bye.